this week in the headlines are all about a housing freeze and how this is the worst sales in years. But they are focusing on the wrong data if they're trying to correlate this to some kind of market correction.
Yeah, I think, I guess some of these TikTokers or whatever you want to call them, they didn't go through 2008 like I went through 2008. Like so I'm looking at very different sets of data, and it's I guess it's okay when you take a look at something and it goes down like a very, very small percent and you say we're crashing, and that's kind of what I think is happening in a lot of cases. But having gone through a couple of these personally, we're not even close. I mean, there has to be some very, very significant things for any type of a crash or major correction. The first thing is you have to have an oversupply of something, period. Like, let's just start there. You have to. Like, you can't. In 2008, there were 4 million homes, 4 million, on the MLS. It took years for that to sort itself. Then because of the extra supply, prices went down because as a buyer, you had lots of choices. Right now, we just got to like 1 million, like on the MLS today. And don't forget, we're at an all-time shortage. There was from 2012 to 2022, there were almost 16 million new households, but only like 8 million new houses built. So we're not keeping up with the supply at all. So we're undersupplied, and so the math doesn't work on any of this.
Well, first, let's dip into what the headlines are saying for those of you that have not been reading on this. So they're saying that housing sales are at multi-year lows, that there's affordability crisis, and that the high mortgage rates are killing the market. But the media is only focused currently on the transaction volume. And the transaction volume is not... It's part of the puzzle, but it's not the full extent of the picture. So let's first look at inventory, like you were saying, right? Inventory is still tight. Now, 2019, we would call our pre-pandemic normals. And then we had extreme shortages in 2021 and 2022. So now that we're in 2026, we have parts of the country that are exceeding 2019's levels slightly, and other parts of the country, like the Northeast, that are still historically low. But nationally, we are still historically low.
Hey, Jerry, can you pull that up real quick? So, okay, what I want you to focus on is all the way left. So let's just call that 2016. We had almost 1.5 million listings. We just went from 980, I think, to about 1 million recently. We might be closer to 1.1 now for listings. So all you have to do is look at the left side of the recession line, which is the gray, and the right side. You can clearly see that we're not back, not even close. We've got like 3 months of inventory. So you can't ignore that even if it went down there at the very far right side, even if it went down, it doesn't mean that it's a crash. That's actually the opposite. What it means is that if inventory is pulling back, it's not good. High inventory helps home prices, right? So it's really interesting. And obviously, we didn't want to go all the way back to 2008. But in 2008, there were 4 million. So you can imagine how much higher it was. That was a real crash, and that is when we saw the first real price corrections. And what happened in the gray area there for the recession is, if you guys remember, the federal funds rate started going down, and obviously we threw all that stimmy money out in the economy during that period, right? Let's call that the pandemic. Well, low supply, low interest rates, and cash drive prices up. So that's what happened. That's what the run's from.
Yeah, and you have to remember, so in 2008, people had to sell, right? And so they had those balloon payments. So you couldn't delist. There was no delisting. Sellers were in so much trouble that they had to sell no matter what price. They also put a lot of times 0% down. So it was super easy to just turn their keys in and walk away. So we're not in that same situation right now. We're also seeing a lot of delistings. So we're seeing record delistings and also record, and then also increased listings, but that doesn't equate to sales. And that's what the media is focused on. But I think the big thing that the media is missing right now is they're not talking about the actual sellers. The sellers are a huge component in market price corrections. And sellers right now are in very good positions. Jerry, if you want to pull up that chart.
Yeah, let's pull up the interest rate chart and show this is a really, really interesting chart.
You have the one with the loans and the percentages?
Yep.
So right now, most people, as you're going to see from this chart, are locked into rates that are under 3%. So the majority of loans, if you look at all the loans listed, are under 3%. A huge bulk of them are under 4%.
Let's just stay here for a second, Jerry, because I don't think people understand what this, some people do, but what this means, guys, is if you're sitting in any of these loans, because right now we're in the mid sixes, is that right?
We're at about 6 right now.
Okay, let's call it 6. You got to get all the way down into the 4 range, under 4. So you're talking about 2 full percentage points before people are going to unlock this equity. So what this doesn't show is the equity. So if you focus on that box right there, the red box, I can tell you that that's a little over $30 trillion in trapped equity. So the average equity for a home right now is about $302K. That's a lot. So if you think about this, this is so different than 2008, where we had 6 or 7 trillion of equity. Right now, if you look at the whole chart, it's closer to 36 trillion of trapped equity. So it's basically in order for there to be a crash, people they're not going to have money. Like you gotta focus on what Daniil said. Take a look at the seller. The sellers have equity. They have cash in the bank. It's in the form of equity, but it's sitting in their home. And so rates have to come down easily 2 percentage points before the market's really going to move. Mm-hmm. Because just why would you, if you've got let's just say a lot of people are sitting on these, $300,000-$400,000 mortgages at 3%. And there's no way that they're going to sell and buy something at 4.5 next door or 5 and trade it out for a 6% mortgage. It's just not going to happen. So you got to have the market's out of balance right now because of these rates.
But, a lot of times people say that once these rates come down, we're going to have all this supply hit the market, and that is also going to increase inventory.